Everybody's scrambling to figure out what the hell is going on. Where is this going? Are we going to get a recession? There's a lot of things suggesting a recession could be on the cards. You're fighting the biggest logarithmic trend we are ever going to see. Everybody's scrambling to figure out what the hell is going on. Where is this going? Are we going to get a recession? The issue right now is inflation. This is the thing that everybody's talking about and everybody's fearful of, is we've never seen inflation like this. Well, not since the 1970s. So if you look at the chart of CPI now, you can see we're at levels of 8%, which is something we can't get our heads around in this apparently deflationary or disinflationary world. How did this happen? Was this the money printing? Now, I've talked at length about this in other Real Vision content and written a lot about it in Global Macro Investor and Macro Insiders. My view is that the persistent inflation of the 1970s that you can see on this chart was actually driven by demographics. When the baby boomers came into the population in the largest number in history, let's say 30-year-olds all buying their first house, first car and everything else together, we had a demand shock. We also had supply shocks as well, from the Arab oil embargo in 73, 74, and then going into the Iran crisis in 79. So we had a double. We had a massive demand shock and a massive supply shock. This time around, I think it's different. This time around, we have a supply shock because essentially the pandemic had shut a lot of things down. So that was the supply shocks of trucking and moving goods around and manufacturing, and factories weren't open. And so you had to bid for higher prices to get stuff. And then there's the issue of underinvestment in commodities themselves. So what's happened is, as the world's reopened, we don't have enough ability to produce commodities at scale. Then we throw in the Russian crisis, the war in Ukraine, and we've taken commodities out of the market, created this very heady mix that is really scary right now for everybody. And I'm going to talk you through why I think that we are at peak inflation fears and the world is about to change towards low growth and inflation coming down, and what that might mean to you, your portfolio, the economy, and to asset markets. There's a lot of things suggesting a recession could be on the cards. Either way, it's going to change the structure of markets and how we're thinking about things. And the key one is inflation. Listen, I'm not sure that this time things are different. I'm saying, yes, we've had some extreme events, and extreme events lead to offsetting extreme events. We had the extreme events of the pandemic, the extreme events of the inflation, and then we get to the downside of this. And with this kind of magnitude of monetary tightening, we're going to see an accelerated downside in growth. It is an unbelievable time. The world has never lived through a period of time of Metcalfe's law adoption curves on top of Metcalfe's law adoption curves, creating Reed's law, which is a ridiculously powerful moment in time. We've got this aging population. It's creating tremendous fear because the rate of technological advance is so dramatic. We've never lived anything through it in such a short period of time. But you want to own that bloody stuff. You don't want to fear it. And I see people on Twitter all day. It's like, oh, Kathy Wood, these people are awful. Who wants to own a Tesla? You're fighting the biggest logarithmic trend we are ever going to see. That is the opportunity of a lifetime. So I want to be a buyer when I see that the inflation story goes away. I'm looking to buy growth. In fact, and if we get a recession, what are the Fed going to do? Well, the Fed are going to print. And what does that do to these stocks? Well, real rates fall. Those stocks explode higher. And they're already very oversold. So if I use Amazon as my example of, just encapsulates the whole space. This is a network effect stock that has gone up relentlessly in the log channel, as Metcalfe's law suggests it should, unless the network fails and then it turns off. It has various S-curve moments, which is when the market's not sure, is Amazon going to survive? And that one was in 2014 when it fell 30%. That was like, is Amazon just a bookseller? Is this cloud thing? You know, what is this? This is nonsense. They're an online retailer. Why are they doing it? Well, what happened was the next explosion of growth and their network adoption model with these multi-networks that they've built. So you get these sharp sell-offs. They tend to go to one or two standard deviations oversold, or they trend sideways. So Amazon is basically two standard deviations oversold by doing nothing recently because growth names have been hurt, and it's been relatively hurt. And so you should be a buyer, not a seller. And a lot of you will be saying, yeah, but inflation has changed everything. Inflation does not change the technological advance or the rate of adoption of networks. I'm sorry, it just doesn't do that. And so if these networks grow and revenue models increase, and all of these are proven over time that revenue comes, then any sideways trending is a correction and they should be bought. Crypto, network adoption model, I've talked about this. I updated this chart a while ago. Most of you haven't seen it. The crypto adoption is now massively outperforming the internet. It's been growing at about 165% a year versus 85% for the internet for the same period of time now. So this is the fastest adoption of any technology in all human history. We are going to get to 5 billion users by 2030, i.e. full-scale adoption of crypto as technology for the internet of value and a host of other things. And 1 billion users comes in 2024. And that's by lowering the rate of growth again. I'm not assuming that growth stays as red hot as it has been. And in fact, growth has been slowing. So I think that is the magnitude of what is happening. And you can own this, unlike the internet. It's much easier to own because you own a share of the network by owning the crypto. The next chart shows it in a more dramatic way, which is not on a log scale. And we're assuming the internet was growing at 43% a year from about year 6. Year 1 in this case, or year 0 in this case, is 5 million users. We took crypto and internet users at 5 million and then looked at their growth as they adopted. So after year 6, the internet was growing at 43% a year. So if crypto grows at 43% a year, gets to year 10, which is 4 years' time, at 1.2 billion. But if it continues to grow at 76, which is a lowering of growth versus the 165% it's doing now, we get to 2.8 billion. I mean, these are astonishing numbers. The world has never seen anything like this before. So whatever happens, whatever the trend rate of growth is, this is exploding. So my macro backdrop is massive. Then crypto's going to do very well. And I know there's a lot of people expecting a crypto winter. I don't think that is the case. I think we need to watch what happens to the economy. If inflation goes, crypto takes off. So let's go back to my favorite log chart. Here's the log chart of Bitcoin log chart using the regression channel, 1 standard deviation oversold. That 1 standard deviation sold is as big an oversold as crypto as Bitcoin ever gets. So we should be buyers, not sellers. I mean, could it go lower? Possibly. Probability, no. So I think you should be a buyer and seller. We're looking for this inflection point of this, maybe the ETF, maybe the ETH 2.0 staking. That's going to change the dynamic of this market. And if inflation numbers are falling and growth is falling, you want to own crypto. Long duration assets. Here's the log chart of Bitcoin, just the recent price action. It's just sideways. Nothing's happened. I love a sideways consolidation. Sideways consolidations lead to explosive upside. Now, does it go lower, hit the bottom of the channel? Probably, possibly. Don't know, don't care. Because I'm in this trade for the long run, because the long run, you need to ride the exponential log channel. And I prefer ETH than Bitcoin because here's the ETH Bitcoin cross. It's a running flag. And normally that resolves with an upside break. So we should see a significant outperformance of ETH over Bitcoin over time. And it's been doing that in recent times, even as Bitcoin sold off.